Welcome, everybody. Thanks for registering and joining to talk about taxes on a Wednesday. Where is everybody calling from? I'm just going to start some chatter. Charlene from Washington State. I was just up in Leavenworth a couple weekends ago. Welcome, Allison from Denver, Jack from LA. Welcome to all our East Coast folks. It's lunchtime for y'all. Texas, Sonoma. Welcome. Ooh, some neighbors in Tucson. Welcome, welcome. Today we're going to talk about late S Corp elections and what that could mean for your tax bill. So really appreciate everyone so interested in taxes joining this session. Welcome from Missouri. Hello from Kansas. Thanks everyone for being here. Highly encourage some chatter here in the webinar chat. And also, this session has some time reserved at the end for open Q&A. So if you've got questions, we kindly ask that you put them in the Q&A box of Zoom. That way we don't miss them in the chat. But welcome. Welcome, welcome. We're going to give it another minute. How's everyone feeling about where we are in the year? It's October 22nd. I was coordinating some holiday plans between all the families this weekend, and I can't believe I was doing it already. Here we are. Glad extension season is over, Charlene. Yes. Now we can just talk about the upcoming season and closing out 2025, which is crazy. Marianne, I agree. It's gone by too fast. All right, we're going to get started. We've got a good group here. Again, if you've got questions throughout this presentation, please use the Q&A feature of Zoom. If you've got general comments, always welcome in the chat. But real quick, we're going to dive in with the agenda. We're going to talk about how an S Corp election could lower your tax bill. So highly circumstantial. This session is focused specifically on freelancers, solopreneurs, single-owned LLCs, sole proprietors. Businesses of one is where this conversation will be focused. So if you've got a larger business, please just take this information with a grain of salt. It's general education specific to solo business owners. What is a late S Corp election? So there is an IRS process and how to follow that relief process. Who is eligible to make an S Corp election, specifically a late election? And then we're going to turn it over to Q&A. And Q&A can often go over. Jay will talk about multi-member LLCs. I'm going to answer that question at the end about who Collective is built for, but thank you for bringing that up. We will touch on that. Our product is built specifically for businesses of one, so it's kind of just our niche, who we support. It's not to say that a multi-member LLC can't follow late relief with an S Corp election. Oksana, yes, this recording will be sent to you after the session, and these videos are also posted on YouTube. So if you want to watch any of the prior recordings, you're welcome to. They're free, they're available on YouTube, but there will be a recording. This webinar is for educational purposes only. Nothing contained in this presentation should be construed as legal or tax advice. Always consider consulting a professional if you need legal or tax advice in operating your freelance business. And here we go. How an S Corp election can help lower your tax bill. So real quick, we're going to start with some foundational education on what types of taxes are solopreneurs paying. The first one is income tax. This is the one that we're all too familiar with. It's inevitable for all of us in the United States who earn income. We are subject to income tax. So income tax is what's determined by your filing status. So maybe you're single, married, filing joint, head of household, and then it's based on your total household income. So if your partner works, has a W-2 job, maybe you both have an investment property, maybe you've got some stocks in Robinhood, your income tax is factoring in all of those income sources to ultimately determine your income tax rate. If you live in a state with income tax like I do in California, this is both federal and state level income tax. So this is one piece of tax that solopreneurs and all of us pay. Separately, when you are a freelancer, sole proprietor, single member LLC, you also pay self-employment tax. So if you've gone through the motions of being self-employed for some time, you're probably familiar with a tax form. It's called Schedule C, and it's where you report your income and deductions for the year. So it's essentially a profit and loss statement. That bottom line, the profit, is subject to self-employment tax. And so this bucket of tax is made up of Medicare and Social Security. So it's funding these government systems. It's a combined 15.3%. So when you're self-employed, you pay both federal and state income tax plus 15% self-employment tax on your business profit. So really what's happening is that on essentially the entire year in. So if you've had tax or employment, this is on the personal return. So if this is you, this left column is demonstrating what's happening to self-employment tax. So this individual's earned 160,000 of business profit. Now, profit, real quick refresher, is what's left over after your deductions. So revenue is what you bill your clients. That's straight up money in the bank. Then you deduct this individual's got 160,000 of business profit. The advantage of S Corp has to do with the way you pay yourself. So in this structure, the way you receive your income compensation is called an owner distribution. All that means is you transfer from business checking to personal checking, and then you spend that money to pay your bills. So as a sole proprietor or single member LLC, you've got 160 of profit, which means you can pay yourself through a distribution 160,000. Under this structure, that entire 160 is subject to both income tax and the 15.3% self-employment tax, which is generating this nearly $25,000 self-employment tax bill alone. On the right, we've got an example of the same person who's elected S Corp status. So maybe they had the LLC already set up and they've added the S Corp election. The way you pay yourself out of the S Corp changes. Once you add the election, you're required to pay yourself what's called a reasonable salary. And this is a formal wage that runs through a payroll process. So think ADP, Paychex, Gusto. These softwares will generate a pay stub for you every 2 weeks or monthly cadence, whatever you choose. And this is a wage. It's going to have your income tax withholdings, and it's also going to withhold your portion of Medicare and Social Security. So you'll only pay self-employment tax on this owner wage. The rest of that profit, the leftover 100,000, is available for you to take an owner distribution that gets to skip the self-employment tax layer. So now as an S Corp, same 160 of business profit, but the way you receive it is in two buckets. One bucket's the $60,000 hypothetical wage running through payroll, maybe on a cadence direct deposit. It's kind of happening in the background. The remaining 100,000 is available for an owner distribution that you facilitate as the owner. So in this structure, now we're paying ourselves a reasonable wage, and only that wage is subject to the self-employment tax instead of the entire 160. So now we've got a difference of nearly $15,000 in self-employment tax that you just wouldn't pay if you've elected S Corp status. I see a couple great questions in the chat. If you don't mind, Alicia and Miranda, if you don't mind moving those questions to the Q&A box, just so that I don't miss them. But we will, those are great questions and we will get to them. So what is the S Corp late election and the IRS late relief process? So the IRS just some context, created this whole subchapter S piece of the tax code specifically to support small business growth. Prior to its existence, there was the C Corp structure, which had the true like corporate level 21% federal income tax on corporate income. And then the owners would pay tax again when they took dividends out. So the C Corp structure really demonstrated that true double taxation structure, which was not advantageous for small business owners. So the S Corp election was created to help alleviate some of that corporate level tax and allow pass through taxation. And also give you an opportunity to reduce self employment tax through the reasonable salary. So the S Corp election, making the election does require some additional steps. Specifically, the IRS requires it to be made within a certain time frame. It's within 2.5 months of your desired effective date. So if you wanted to have an S Corp effective January 1st, to make a timely S Corp election, you would have to make it by March 15th of that year. So 2.5 months from that date. If you miss that deadline, there is relief. And so that's what this webinar is talking about. What is the late relief process? It's sometimes referred to as a retroactive S Corp election. Maybe you've heard the term backdating. What that means is you're electing S Corp status for a period that's already passed. And so we're kind of recouping this S Corp status for a prior period. So sometimes referred to as retroactive. Maybe you've heard it called backdating. With the IRS, it's actually called filing following late relief. What does it let you do? It allows an eligible business to elect S Corp status for a date in the past rather than within that 2.5 month window. And what's the advantage? It could potentially allow business owners to capture self-employment tax advantages, like we talked about in the prior screen. And it can also give you an opportunity to rebuild your financial history. So think about historical pay stubs or financial statements. All of this needs to be rebuilt to stay compliant with the S Corp status. But the big opportunity for most folks is the potential to lower their tax bill. So timely elections versus late relief. Timely elections, we touched on this briefly. The S Corp election is made with a form called Form 2553. It's a relatively simple 2-page form. The form itself, you can probably DIY it. There are some extra conditions and things to fill out when you're following late relief, but the form itself to make the election is simple. It must be filed within 2.5 months of the desired effective date. So again, if you were to do some research and you found this March 15th deadline for S Corp elections, that's what's covering that 2.5 month window from the desired effective date. Anything after that would follow late relief. A timely S Corp election can prevent hassles with catch-up, so compliance catch-up, bookkeeping, payroll catch-up for the S Corp election. And if you missed this timely deadline, there is relief. Filing Form 2553, there's a section at the bottom called Section E, and it's where you can state you're following, the late relief process, you are eligible and qualified to make late relief, and you agree to the catch-up compliance required once an S Corp election is approved. So pros and cons of late S Corp elections. There's extra compliance. Regardless of when you make your S Corp election, the S Corp election itself triggers a lot more administrative weight than if you are a sole proprietor or single member LLC. Specifically, what's required, you need more comprehensive bookkeeping. So an S Corp tax return is going to report both a profit and loss and balance sheet on the formal IRS filing. So if you're just doing like an Excel spreadsheet that's showing your profit and loss, you will likely need to level up to an accounting software that's going to generate different types of financials. You need to pay yourself a reasonable salary. And so we touched on this a bit. This is how you save on self-employment tax is the reasonable salary has the self-employment tax instead of the entire profit. With that, you do need a payroll software. And so payroll can quickly become complex. It's not as simple as just transferring money from business checking to personal. That's a distribution. A reasonable salary needs to go through a formal payroll process that requires like a separate standalone employer registration with your state. This is different from your EIN. Payroll will automatically put you on a payroll cadence of your choosing. So every 2 weeks, once a month, depending on your needs, it's going to generate pay stubs. So if you need to show proof of income for any reason, you will have pay stubs. It's also going to automatically remit income tax withholdings. So if you were in a corporate role before and you looked at a pay stub, there's income tax withholdings, and it's also going to take out the Social Security and Medicare tax with every paycheck and submit that to the IRS. Something that's often overlooked with payroll is there are also quarterly payroll tax returns for both federal and state. So a payroll software is going to automate all of this for you. It's going to populate payroll tax returns, submit them on your behalf. And then lastly, you have to file a separate business tax return. So contrary to being a sole proprietor or single member LLC, once you add the S Corp election, you agree to file a separate standalone federal and potentially state level business tax return. And so with all that, there's extra costs. Depending on how late you're filing your S Corp election, maybe you've got to rebuild all of that. So with all that, pros of late relief, there's an opportunity to miss this timely deadline. There's the potential to lower your self-employment tax. And again, we touched on this earlier, it can create a financial history for you. So you're rebuilding financial statements. Maybe you've got your eye on an SBA loan or investment property, and this proof of income and business activity can work in your advantage. The cons of late relief are kind of what we just touched on, the increased complexity, the increased compliance, especially if you're rebuilding from scratch this late in the year. We're looking at 10 months of bookkeeping rebuilds to generate financial statements. That could look like pulling together all your business bank and credit card statements. Maybe there's some business related expenses mixed into your personal. So rebuilding those books can be time consuming, stressful, expensive. Getting payroll caught up. So failing to pay yourself a salary out of the S Corp can be risky. It's how you save through the S Corp. So in theory, the lower you pay yourself, the more you might save. But what's the risk? The IRS needs you to pay a reasonable salary. They don't clearly define it, and we'll talk about this in the Q&A. They need you to pay yourself a reasonable salary to fund the Social Security and Medicare tax system. So you're paying into self-employment tax. If you don't pay yourself a salary and only take distributions, or pay yourself a salary that's too low and take a lot of distributions, it could look to the IRS like tax avoidance, like you're completely skipping the self-employment tax layer. So the requirement for catch-up payroll, especially if you're filing late in the year, is crucial. Time-consuming and costly catch-up, again, it depends on who you need to tap to support you to rebuild books or to run payroll, or identifying a CPA who has capacity to file a business tax return. The IRS does let you go back up to 3 years if you're filing a late relief election, but what comes with that? It has an impact to your personal filing. So it's likely that you'll have amended or past due tax returns if you try to recoup, more than the current tax year going back for late relief. So who is eligible and how to make a late election? We're going to get through this last slide relatively quickly because I do see there are a handful of questions, and keep them coming. Who is eligible for late relief? The IRS, before we get started, has conditions on who can even elect S Corp status. It's intended to support small business growth, so it does limit the classes of stock that you can offer, the amount of shareholders. It's limited to less than 100. And the type of owners are limited. So first, you need to make sure your business or the owners within it are eligible, and less than 100 shareholders. Permanent resident status is also part of this. Otherwise, if you otherwise qualify for an S Corp election, how are you a candidate for late relief? You meant to file the S Corp on time, you just missed the paperwork. Maybe there was a valid reason for filing late. Maybe your CPA retired in the middle of tax season and forgot to tell you. Maybe you were out of the country. There are a lot of reasons. The IRS has a list on what qualifies or constitutes being eligible for late relief. And then overall, you're within the grace period of about 3 years. So again, how to file with late relief. Again, the S Corp election form itself is relatively simple. It's a 2-page form. And when you file late relief, there's just a couple extra steps to add on to that tax form. You're going to state your reasonable cause. You're going to put a header at the top that tells the IRS you're following late relief. And then the most critical and most important is what happens after that. And I'm going to talk about it real quick. What does collective do? We kind of solve the what happens after you make the S Corp election. Before we pivot over, I'm going to pull up a poll. We'll take a minute here. Your feedback is so important. These sessions, we're testing different topics depending on what people need to know about. So we would love your participation in the poll. And I'm just checking the chat while we do that to make sure all the questions moved over to Q&A. Alicia, yes, your question's in there. Miranda, perfect. And I see a couple others. So thank you. Keep the questions coming. The session is over at 10:30, but we do go over sometimes. So if you've got time to hang on, feel free. And if not, we'll post the recording. All right. And once we wrap up that poll, Sarah, I think we're good to close it out. Before I move over to Q&A, real quick about collective. So I'm going to leave this slide up just for a quick second. If you're somebody who's exploring late relief, you've got an LLC already in place, that is a requirement. An S Corp election needs to be added on top of a legal structure. So if you have an LLC in place and you miss the deadline for 2025, collective can still help. Because of that additional catch-up work, we do have a deadline of October 31st. That's the last day we can do any 2025 late relief elections. So if this is something that's been on your mind for 2025, please scan this QR code. You'll be prompted to fill out a questionnaire just to make sure you're a fit for collective. Again, collective is built specifically for solopreneurs, so single member LLCs, sole proprietors, those who want to elect S Corp status for their business of one. It's not to say that any of this tax, the tax concept can't apply to multi-member businesses. It's just that collective scope is narrowed on single-owned businesses. So what does collective do? We can help you file that S Corp election, but really what we focus on is what happens afterwards. What's the most administrative burden that we can take off a business owner's plate? We do monthly bookkeeping to generate those more comprehensive financial statements. We set you up on payroll via Gusto. It's all integrated into our dashboard. So we do the employer registration, help you decide on what a reasonable salary is, make sure that your payroll tax returns are submitted. And then we prepare and file that business tax return each year. And then in the background, you've got a community of other self-employed professionals and a team of self-employed experts at your disposal for questions. So I'm going to leave this up for a second, and we've got 17 questions. That escalated quickly. I'll leave this up for a quick second. Sarah's also going to drop the link in the chat, and I'm going to turn off my screen, and we are going to dive into Q&A. So Anna's asking, do you need to have an LLC or PLLC for an S Corp? Yes, thank you for asking this because it is something I forgot to mention in the main section of the presentation. An S Corp election can only exist if you have a legal structure in place first. So a legal structure could be an LLC. A PLLC is a professional LLC. It's specific to people with a state issued license. Maybe a board issues your license, and so it's state issued. Not every state has PLLCs, but in either case, an LLC, PLLC, C corporation, sometimes called a stock corporation, or a professional corporation, those are all legal structures, and a legal entity needs to be set up first, and then you can add the S Corp election. So if you're a sole proprietor, no legal structure is formed, the earliest you can elect S Corp status is that LLC formation date. Alicia's asking, how can we determine the reasonable salary? This is a great and very touchy question. The IRS does not define reasonable salary in the tax code with any formula. It's very vague guidance. So we mostly rely on court cases where reasonable salary was put into question. And then we can defer or infer what the IRS took from that case to figure out what they think is important. What we found, actually, there's a couple things that we found. You might have heard something called the 60-40 rule, which is essentially a percent allocation of your business profit, where 60% goes to reasonable salary, 40% is allocated to distributions. This is a general rule of thumb. The IRS does not vet this approach. It's not a formal IRS formula, but it's a general rule of thumb to get started on where your salary should land. So just know if you've seen that rule, it can be a great starting point for establishing a range. The factors that the IRS will mostly consider is where do you live? What's your region? Are you working full-time or part-time in this role? What's your seniority? And what's a comparable salary? And so between those factors, you can start to put together and document it, a range for your salary. And then you as the business owner can ultimately decide where you fall in that range. Now, because you control the payroll software and the cadence, you have full control to skip a payroll. Let's say you thought your business activity was going to be X, but a client bailed. You can skip payroll if something changes that you were expecting. Maybe you brought on a big client at year end and your revenue doubled for some reason. Maybe you pay yourself an off-cycle bonus. So there's a lot of flexibility with the in-between. Really, you're aiming for an annual target. And then just like with a normal wage, you probably want to adjust it annually, like giving yourself a cost of living adjustment. Angela, how do you determine the amount that can be taken as an owner distribution? Can you take whatever you want? Generally, yes. So without getting too complex, you can take an owner distribution. The parameters we generally put on this is don't drain your business bank account. You need to leave a cushion so that normal operating expenses can continue to run through that business bank account. But ultimately, you as the business owner can decide the cadence. It can be 1 week you need $1,000. In June, you need 10 grand for family vacation. So you can totally own that owner distribution cadence and the amount. Again, the asterisk, without getting too technical, don't drain the business bank account. You want to leave a cushion so that you're letting normal business expenses run in the background. Jay, thank you for moving this question over to the Q&A. What about multi-member LLCs? So collective is built specifically for single-owned businesses. The only asterisk we have on that is if you live in a community property state, there's only about 11 of them. Community property states that if an LLC is owned by a legally married couple, then it counts as a business of one. So that's the only exception that we have here at Collective. So for all intents and purposes, we do only support businesses of one. It's not to say that multi-member LLCs can't elect S Corp status. Again, you still have to consider all the owners considered eligible. So permanent resident alien, certain types of trusts can't be owners in an S Corp. But yeah, it's not to say that the S Corp election can't be applied towards multi-member LLCs. It's just that Collective doesn't support them. Alicia, when can one take the distribution? Anytime. So anytime, any amount, again, just don't drain that business bank account. But you as the owner can totally facilitate it. It can be as simple as a cash withdrawal from that business bank account that you use personally. It can be an online transfer. Sometimes distribution just looks like you paying for a personal expense out of your business bank account. So sometimes that happens. In the instance that happens, you would just flag it to your accountant or bookkeeper that you had a personal expense come out of business and they would code it as a distribution. But you can facilitate the timing and the amount. How can we determine the reasonable salary? We did touch on this based on facts and circumstances. So comparable salary is usually a great place to start establishing a range. And then maybe you factor in the part-time versus full-time, your seniority in a role. Maybe you're wearing different hats. And so you want to come up with some kind of blended salary. Ultimately, you want to document it, make adjustments throughout the year and year over year. The risk in setting a salary too low, again, is that the IRS could say, well, you took distributions, but you didn't take a wage. Therefore, you didn't pay into Social Security and Medicare. So the risk is that the IRS could assess a salary for you and then add on the Social Security, Medicare, plus penalties on interest on top of that. So again, comparable salaries are probably a great place to start. The 60-40 rule, if you were to do some research, would probably come up at the top of your search. So a blended approach to all of those, and then document how you arrived there. Miranda's asking, is there a minimum reasonable wage? Also, for those just starting out, at what revenue point does the S Corp election make sense? So the first question, is there a minimum reasonable wage? You may hear of people trying to just pay themselves the minimum wage through their S Corp. Really, what's better is what we just touched on. Focus on what's reasonable for the nature of your business, your industry, where you live, and a comparable salary. That's the benchmark for what your business will be compared to and the reasonable salary. For those just starting out, what revenue point does the S Corp election make sense? So the S Corp election can be made for multi-member, single-owned businesses, and the IRS also doesn't care how much money you make. So you can have a business operating at a loss that's elected S Corp status. So in theory, there's no revenue profit threshold for making an S Corp election. You can do it whenever, assuming all the owners are eligible owners. Generally, folks like to decide to make the switch when their savings potential is more than what it costs to do the extra work. And so usually we've seen that where profit, so what's left over after deductions, is more than 60 to 80,000. There are a lot of other factors that come into play too, like whether or not you have a full-time salaried role elsewhere. That can play into whether or not the savings exist. Maybe if you live in a state or city that's not friendly to S Corps, think New York City, they have a separate 9% city level tax on S Corp income. So, those thresholds may not necessarily make sense depending on, your other sources of income or where you live. High level, 60 to 80,000 of profit, so after your deductions, is a great time to have a conversation. Jean-Claude, what would happen if LLC is started yet after the first of the year of its state registration? So I think what Jean-Claude is asking is, what if your LLC doesn't have a January 1 a formation date? Your S Corp can only go as far back as that LLC formation date. So if you formed it or your LLC was approved January 3rd, your S Corp can only be effective as of January 3rd. Jean-Claude, if I misinterpreted your question, please feel free to correct me and repost it. DJ is asking, for the catch-up compliance, I filed Form 2553 about a month ago, but don't know if I'm approved. So the IRS does take some time to send confirmation of your S Corp election. Assuming that it was filed or filled out properly, we often assume that you're going to be operating as an S Corp once you submit it. I would say if you filed it a month ago, it's reasonable that the IRS hasn't sent anything back. Sometimes it can take 1 to 3 months. But you will get a letter from the IRS confirming your S Corp effective date and that it was approved. In the instance that it gets rejected, you can resubmit it and still put all those processes in place to stay compliant. So if you have payroll on deck or bookkeeping, all of that can still exist. There's still time for you to make a correction to that Form 2553 if it does get rejected. But DJ, just know you're still within a reasonable timeline. If you haven't heard from them yet, you can still start operating as an S Corp and get some of those additional administrative pieces in place. Jay, is there a difference between entity type S Corp versus LLC with tax status of S Corp? What would make the most sense for a multi-member LLC? So this is a great question about the terminology and what they actually mean. Entity type S Corp versus LLC with tax status of S Corp. So anytime you hear somebody mention the word S Corp, what they're actually referring to is a tax status or a tax election. An LLC, PLLC, professional corp, legal corp, stock corp, those are all legal entities. So legal entities are what are formed with your state. They're what give you a formal business name, an EIN, It's creating a layer of liability protection, so it separates your business and personal assets. The legal structure is the foundation. That's the entity type of your business. Then any of those entity types can add the S Corp tax status. And so the S Corp tax status is essentially telling the IRS how you're paying and reporting your tax bill. For a single member LLC or a sole proprietor, your tax status is what's called a disregarded entity. All that means is your business activity gets lumped into your personal filing on that Schedule C. And in the eyes of the IRS, you and your business are one taxable unit. Contrary, a tax status with an S Corp election means your tax status is taxed as a separate, it's not taxed as a separate entity, but it's reported as a separate entity. And we call it a pass-through business. So the S Corp is going to report all of its business activity, balance sheet, profit and loss on what's essentially an informational tax return. That business tax return is going to generate two important forms. One is your W-2, that's going to show your reasonable salary. The other is a form called a K-1, which shows the remaining business profit out of your S Corp. You would then include both of those in your individual filing to ultimately report the income and pay the tax. So tax status refers to how the IRS is receiving that business activity and how you're paying taxes on it. Entity type is what was formed with the state. What's the legal foundation? So an entity type needs to exist first, and then you can add the S Corp tax status on top of it. What would make sense for multi-member LLC? So there are some default tax statuses when you've got a multi-member entity. If it's a true multi-member LLC, meaning there's no community property state spousal connection, it's a true business partner. When you form a multi-member LLC, it's going to default to partnership tax status. You can add the S Corp election to a partnership. So contrary to a single-owned business, you still only file one tax return. That's your default tax status, a disregarded entity. The default tax status for a multi-member LLC is a partnership, unless you elect otherwise. In terms of what would make sense for multi-member, it really depends on how you want to split debt or liability or income. Partnerships can get very nuanced very quickly. So it does depend on the nature of your business and how you want to split income and ownership and losses between the partners. Our questions are growing. First question was, how do I know if I'm approved for an S Corp election? Do I start doing payroll now? Have been doing distributions since the beginning of the year and paying quarterly estimates. So DJ, I would first consider, maybe take a look at that form 2553 that you filed. It could still take some time for the IRS to send the approval, but check the box E effective date that you put. If you chose an effective date for 2025, and you assume that it's going to get approved, you should probably start running payroll. Otherwise, it could give the appearance that you only take distributions without salary, which means in the eyes of the IRS, you're potentially skipping a whole layer of tax that they want to collect on. So it's still within a timely window for the IRS to have not sent that confirmation. You can assume you're an S Corp and start getting payroll in place now. If you've been paying quarterly estimates like you have, that's great. Quarterly estimates just mean you're paying into your tax bill throughout the year to alleviate owing a ton at the end. So you're doing the right things in terms of estimated payments. If you assume that your S Corp election will get approved, it would be smart to start running payroll. And we are over time. I'm going to keep going. We've still got 96 folks on the call and 25 questions left. So we'll keep going for maybe 5-10 more minutes. We'll keep recording. So if we don't get to your question, we'll do our best to find a way to get you those answers, but feel free to hang on or drop. These recordings will be posted. Shauna's asking, is permanent resident status required for ongoing S Corp status? I am currently a permanent resident, but I'm exploring digital nomad status. So generally, and this is beyond the scope of collective, but generally, being a digital nomad doesn't by default relinquish your citizenship. So there could be some nuance here, but usually permanent resident status is referring to someone who's not a US citizen, and they would otherwise be considered as a permanent resident. So if you're a citizen of the United States, but you're traveling or you work internationally, it may not impact your permanent resident status. It usually has to do with someone who's a non-citizen. If I want to do late relief, but I haven't ran payroll all year, how does that work? So again, we talked about this. There is risk in not running payroll for yourself when you add the S Corp election because it could look like tax avoidance. One of the big hangups for filing a late relief election late in the year is the amount of catch-up work. And part of that is considering whether or not you do like a one-time catch-up payroll. That is something that payroll softwares can help you with. It's something that when you join Collective, we'll ask you if you want to do. And essentially, it would be like a lump sum catch-up payroll, and then you can continue to run payroll on a normal cadence for the remaining 2 months of the year. It's ultimately up to you as the business owner to decide if you want to do that. And understanding the risk that's involved of failing to pay yourself a salary with distributions can be risky, but ultimately you decide. But we often see people who make the election late in the year do a catch-up payroll. Yvonne's asking, if you're a retired consultant, do you still have to pay Social Security tax? Generally, your income will continue to be subject to Social Security tax. What could play into it, if you're already receiving Social Security benefits, sometimes there's a threshold on how much additional money you make before they lower your payout. I'm not super familiar. But generally, yes, you continue to pay into Social Security even if you're retired. Can you expand on the different scenarios on late elections? It wasn't clear. Great feedback. Thank you for saying that. The different scenarios for late elections. So the IRS on the form 2553, there's a whole section for following late relief and who's eligible and what constitutes late relief. We may have some content that I can send over, but generally what qualifies is relatively vague. It can be something like, I wasn't aware of the deadline. I relied on a CPA for advice and it was poor advice. The reasons are relatively vague. I can make sure we get some resources to expand on it differently, but generally we see people say, I wasn't aware that I needed to make this deadline. I relied on the advice of a tax professional and it was poor advice. And there's one other one that I'm blanking on. I apologize, but we will get you those resources to answer that question better. Charlene's asking, how long does it take to know if you get the S Corp in the late filing? Does this affect with the government shutdown? That is a great question. To be frank, I'm not sure how much the IRS has been impacted with the government shutdown, like as of right now. Generally, the IRS moves relatively slow, so it's normal. I would say it's reasonable for it to be a little bit slower. I would say 2 to 3 months is when people will receive the IRS letter that shows the confirmation and acceptance of their S Corp election. And that form will also show the effective date that the IRS approved. Diane, so an LLC can just file Form 2553 to be an S Corp and not need to file the Form 8832 entity change classification. Diane, yes, an LLC can go directly to Form 2553. Form 8832 essentially changes your LLC to a C Corp. And I think this often gets kind of mixed in with the S Corp election mix because we're recycling the word corp. So this is something super confusing with terminology and the lingo. There is a C corporation, stock corporation, that means a legal entity. So C corporations are the structure that you need a board of directors, you have meeting minutes. C Corp structure is a structure that allows for unlimited or various classes of stock, unlimited investors. So oftentimes people who want to IPO with their business will form a C corporation. And if that's the long-term goal of your business, maybe you do file this 8832. But generally, an LLC, single-member LLC, multi-member LLC can go directly to Form 2553 to request S Corp tax status. How many employees can you have as an S Corp? There are no rules. It limits the shareholders to 100, assuming there's eligible shareholders, you're limited to 100 owners. but you can have as many employees as you need, including you paying yourself a reasonable salary. Nate's asking, when did you say the deadline was for 2025 if you want to work with Collective? So Collective, because of the amount of catch-up work, the bookkeeping rebuild, the potential for a catch-up payroll, our deadline for late elections is October 31st, so the end of this month. So if you can scroll up in the chat and pull that code to schedule time with us, I would highly recommend it. It's not to say that you can't try to tackle a late relief S Corp election in general. You just may need to source another bundle of providers to do it after October 31st. Tom's asking, when does it make sense to consider filing as an S Corp if I'm a single member LLC? So generally people like to make the switch when the savings potential is more than the cost to do the extra work. So if savings are your motivator, that's usually the threshold. It exists around 60 to 80,000 of business profit. There are some other nuances there. So whether or not you earn income on the side, it could play into whether or not the savings exist for your situation. But if you're around 60 to 80,000 of profit, so after your deductions, it's probably a good time to start having the conversation. We're going to go to the 50 mark. We've got 84 folks. Thank you for hanging on. We're not going to get to all the questions, but we do save them after so we can figure out a way to get you answers. Mike's asking, can I elect to change from C Corp to S Corp if I have been in business since 2006? Generally, assuming less than 100 owners and they're eligible, or if it's just you, you can still add the S Corp election. I would say that this is beyond the scope of Collective because when you do switch from C Corp to S Corp, there are some nuances in the transition year and the tax reporting that a more traditional CPA firm would be better equipped to serve. But in theory, yes, you can add the S Corp election, Mike. Monica's asking, what happens with the distribution? Where can it go? So distributions are transfers of your business profit to you as the owner for personal use. They can be a cash withdrawal, so it could be cash in your pocket. It can be a transfer, so direct deposit to your personal bank account. You can, this is not advisable because it does require a little bit more manual bookkeeping, but you can just pay for an expense, a personal expense out of that business bank account. And then you would just flag your bookkeeper that it's a personal expense, and then that gets coded as a distribution. So anytime you're using business money for a personal reason, no matter where it goes, bank account, directly to your mortgage, it will be coded as a distribution on your business books. Susan, what are some reasons for late election that the IRS accepted, such as business owner took a while to decide to do S Corp election? I mean, we touched on this briefly. I think from what I've seen, most people keep it vague. Here at Collective, in my time in public accounting, the reasonable cause statement was relatively vague. It pretty much aligned with what the IRS shows as acceptable. So it could be as simple as, business owner was not aware of the S Corp election deadline, but intended to be an S Corp. Business owner was not informed by CPA about S Corp election, would have otherwise elected. And so these are hypothetical, but these are kind of summarizing what I've seen on 2553s throughout my career in public accounting and Collective. Shauna, so you can take a distribution in addition to payroll and then just code it as an owner draw or something. Yes, exactly right. So the way you receive your total compensation out of the S Corp is payroll and distribution, and that's your total cash flow. And so if we were to go back to that slide that showed the difference between the two where it was comparing, the question I often get asked is, oh, wait, so as an S Corp, I only live off of this $60,000 salary when I'm really making 160. No, because under this structure, you receive your income in two parts, the distribution and the payroll. And then spot on, Shauna, you do code distribution to an owner draw on your balance sheet. That gets reported on the business tax return. And then you still have your total compensation. Can S Corp election be requested as a late filing starting as of January 1, 2023? So the IRS has about a 3-year grace period. So you technically can go back 3 years, assuming you had an eligible entity in place. What to consider if you go back that far is what's going to happen to your entire tax profile. If you got approved for an election back to January 2023, you would trigger an S Corp tax filing requirement for 2023, 2024, and 2025. For the years that have already passed, the S Corp tax return has a direct impact to your individual filing. So if you go back that far, not only will you have to pay for books to be rebuilt if you don't have that, consider whether or not you should do payroll runs for those periods, plus the payroll tax returns related. You might have to amend your personal filings that were filed for 21 and 2024 or 2023 and 2024 to accommodate for the changes to your S Corp. So in most instances, it could end up being a lot more expensive than it's worth, but it's technically allowable. I'm going to answer one more from Salvador. Here with an investor's visa, but on a green card process. Do I need to wait to get my work permit to move to an S Corp? If your green card is not approved, generally, and again, I would consult with a tax advisor that's got more industry experience with visas, but we've generally seen that visas may not constitute permanent resident status. And so, there's all these factors where you determine, have you been in the United States for more than 6 months of the year? There's a lot of factors that go into determining that. It's something that collective can't help with, but generally we've seen visas won't constitute permanent resident status. Green card will. So if you're waiting on a green card and it's already in motion, it may be best to wait for that to be approved. We answered 27 questions and there's 20 left. Every time we do one of these sessions, I'm so appreciative of the participation, the great questions. There are never bad questions here. For the folks that didn't get your questions answered, we are going to do what we can to record answers and post them to YouTube in addition to this recording. Thank you for hanging on. Most of this group is still here. Really appreciate it. Believe there's one more survey at the end and a link to schedule is in the chat. Thank you for the time, and we will see you next week. Bye.